Let's take our conversation forward with Atul Suri. Atul, good morning. Thank you for joining us. Atul, it's been a good September, a very decent October, but November is where a little bit of consolidation and numbness has started. Do you think
Right.
we've topped out for the year and we may remain like this for next couple of days, weeks, at least for the year now?
It is very possible. And, there's nothing to be worried about, Nikunj. If you look at the market, the Nifty per se, take it on a 1 year basis, we are not talking about COVID bottoms, you'll find that the Nifty is up 40% from a year ago. And if we analyze about 25 or track 25 global markets, India is the third best performing in the world on a 1 year basis. The two markets that have outperformed is Saudi Arabia and Russia. And obviously, that is thanks to the price in crude because they are exporters. So India has been an absolute outlier and an absolute outperformer in the last 1 year. The biggest driver of global markets, the US, the S&P 500 is up 30%. I mean, we're talking about investing globally and all. There's a big euphoria. But Indian markets have done much better than that. Even the Nasdaq on 1 year basis is up about 34, 35%. So the Indian markets have been an absolute outlier and absolute outperformer. And if you start seeing it in relationship to emerging markets, which it is a subset of, thanks to China, the EM index in the last 1 year is up, what, 7, 8%? And we are up, as I said, 40%. So we've had a massive, massive outperformance relative to global markets, relative to the peers that it has. So it is very natural for markets to take some time, take some pause. The correction or the pause can be two ways. One is it can be price wise. That means the prices can correct maybe 10, 20%. We don't know. Or it can be time wise. That means the markets can meander, 18,000, 17,500, 18,500. So I think that is the real issue that comes up. And I am of the camp, or I am in the camp that we believe that it will be more of a time wise correction. The beautiful thing that is happening in India is sector rotation. So if someday banking is not doing well, tech does well, and vice versa. So you're not seeing that big damage. But in that, there is a lot of churn happening, and it is the best option for India is actually we spend time here. We have a time-wise correction, and that is getting reflected. See, there are some issues also globally which will put pressure of India in the short term. The strength in the US dollar typically has its knockdown effect on emerging markets and commodities. You'll find that the way bond yields in the US are going up. So there are some dark clouds emerging globally that will put pressure, and that is reflected in the FI numbers. They have been negative for the last 2 months. So I think that if we continue to have a time-wise correction in which you will have good days and bad days for one sector, another sector, as they say, कि थोड़ा market को थोड़ा time pass करना चाहिए था, which will be very, very good for the market. And I think that will set us up for the next stage. As long as it's price wise, then the pain comes in. As long as it's time wise, it's more a question of patience. And I think as far as patience goes, as investors, we have a lot of it. So that's really my concern of the thing that I look at. As I said, the big red flags are global, which is mainly bond yields and the dollar. But our markets actually are behaving very well, and it's been a stellar outperformance year for the last 1 year.
Well, there is an exciting sector called new tech which is getting created and it's too large to be ignored. If I
Absolutely.
add Paytm expected market cap, we are looking at about $50 billion approximately in these four new tech companies. Which is one startup you would say could be the HDFC Bank of 2000 or the Bajaj Finance of 2010? Because when HDFC Bank and Bajaj Finance they went public, there was no chart, there was no history, there was no past data to analyze them, but they've been stunning market wealth creators. Do you see that same logic will apply in the new tech companies also?
Absolutely. I think that is really bound to happen. You can clearly see that it has all the makings of, every bull market is symbolized by a certain sector or a certain theme. If 2000 was IT, 2008 was infrastructure. So I think this is going to be the digital play that is going to come in. But the problem with digital play or what is happening, or maybe our models is the profitability angle. Because one factor, you are seeing amazing price moves, no doubt about it. But the real test is going to be is that when markets correct. Because when companies do not have earnings, or when there is a lot of assumptions, etc., the volatility that happens or the corrections that happen are very sharp. So for me personally, I would be more biased towards a certain element of demonstrated profitability, because the reason is not that, I mean, yeah, other stocks will not go up. But the fact is that the risk involved in a lot of other stocks, which are obviously based on pure storytelling, tends to be very high. There'll be a lot of excitement, there'll be a lot of money making. But the fact is that the volatility is something which is not my mandate. So in this space also, yes, we are invested, we have a presence, but we are looking for those places which are backed by profitability. Simply because if you're backed by profitability, when markets correct, you don't lose your head. You don't get, your head doesn't get chopped off. The thing is that when it is not backed by numbers, when it's pure hope, and definitely one will pan out. But the journey to panning out to being an HDFC Bank or a Kotak Bank, they were not an HDFC or Kotak from day one. For many years, they did nothing. It is when it got translated to visible profitability, I think that is when the real move happened. And that is not just in India, even globally. Companies like Apple and Amazon and Tesla, we talk about as very haloed companies. But the fact is that these were also disaster stocks for a lot of period of time. It is only when the profitability set in or visible, or the visibility of profitability set in, that you really had that big wealth creation. So I don't want to be in everything. I don't want to be in everything that goes up or every storytelling. But my eye is on profitability, because when profitability sets in, you'll notice historically all the global names also I mentioned. They really, that's when the wealth creation was done. And for a lot of them, where there's a lot of storytelling, I think you will have one correction and a lot of them will get tested, which will also give us a lot of insight there. So I would be selective. I would go where there is a certain visibility of profitability, because we think that that is the ultimate armor in a correction. And we obviously don't want to go through immense volatility also.
Atul, you just talked about some of the banking names, and that's exactly what I want to talk about. I mean, there's no taking away from the fact that, yes, there is a big disruption in the fintech universe, garnering more market share for some of these big banks, which are already sitting at a large base, is going to get difficult in times to come. But at the same time, what's the stock market behavior really telling you? Because some of these banking names were the last ones to actually join in into the rally. And if I just look at the last month-to-date performance, banking as a sector has been the only drag and the underperformer so far.
No, I think that's very true. And, whether we like it or not, everyone is bullish banking. Everyone is talking about an industrial revival. So it's nothing new. It's not unknown. But yet, if you look at the markets per se, you will find that this is a relative underperformer. And that really begs the question that, if you see when these companies come out with numbers, you can see all these, they really spike up. There's a vertical move. But post the numbers, all these stocks are giving away 10, 15, 20%. So what really I see in banking is that definitely the most popular, haloed, overowned, consensus bullishness sector, but the market is telling you something else. So the market is clearly telling you that the money, or there is a certain amount of strategic move away happening from banking. And this is also, I'm talking about the biggest private sector banking stocks. You can go and see it and you can see their price movements. It's not very inspiring. Though, as I said, everyone knows the story is good. Though everyone knows that if revival happens, banking will do well. But the market is telling you something else. And clearly, I feel that the market is going a little lighter in banking. You must remember that in the last bull market, which was from, say, 2015 to 2020, the best performing space were some of these private sector banks. So I think from being grossly overweight, people are getting equal or underweight. And that is why you'll notice that on a day-to-day basis, when you look at banking, it doesn't inspire confidence. In fact, what inspires confidence for me personally is, again, a sector which is talked about, etc., is IT. If you look at the move that has happened post-COVID, the first sector we realized which really broke out into lifetime highs was the IT space. And post that, it's had a very, very beautiful bull market, more so in the mid-cap space. Now that the markets are going through correction of the last, whatever, month, 2 months or thereabouts, you'll realize that IT as a sector hasn't given much away. In fact, it is almost still continuing to push to lifetime highs. So I feel that the crown is moving away from banking as consensus bullishness, max overown position towards IT. Not that IT is a lightweight already, but the fact is that in our lives on a day-to-day basis, global markets, you realize that maximum excitement, Nikunj asked the question about the digital play. These are all related to that space. And I think that the overweight sector in our portfolio, single largest overweight sector is IT rather than banking. And that is a shift in trend that is happening. And these are obviously decadal shifts that happen.
Interesting. What else in the market is actually going to manage to hold out? We've recently seen some good breakouts, Atul, on two different sectors. Autos, of course. We've all seen what Tata Motors has actually done in the last quarter or so. Maruti, for instance, has seen some renewed optimism. It seems that the semiconductor chip shortage is going to ease off. And M&M saw a good breakout after its numbers. And similar can be seen with some of the healthcare services companies. Hospital stocks, for instance, given that their non-COVID occupancies as well are increasing. I just want you to draw up charts for both these sectors and tell me whether or not you find a long-term opportunity here.
So I will just take it, broaden it slightly, Aisha. I find that the interesting thing is what is happening in your consumption space. When COVID happened, consumption really collapsed, and that really led to, a bit of battering in these consumption stocks. Now what happens is that we've had the post-COVID world, we call it revenge trade or whatever that you call it. And the problem happens on the other side is that inflation is kicking up. So prices are going up also. So the interesting thing is that you have a inflation-led growth. That means that, well, prices are going up for sure. We are all feeling it and it's visible. But the fact is that even demand continues to go up. And that, I think, is a very, very interesting prospect in the whole consumption basket. And that is reflected in the consumption stocks. So what you have in a inflation-led growth in consumption is that, yes, these manufacturers will be able to pass on prices. However, when commodities, which is causing the inflation, correct, which I think they will, because I feel the whole inflation thing is transitionary, their margins, which are under pressure, will suddenly shoot up. So I personally think that a very exciting thing is happening in the consumption basket. Today, what is seeming to be under pressure because of raw material cost or because of the inflationary push that is happening in commodities, I feel is temporary. And if you are able to transfer or translate these price hikes without affecting your demand, I think it's a fantastic scenario. And, you can see that even from numbers of Walmart that came out yesterday, that, hey, you're talking about inflation-led growth. The talk was about stagflation, etc. But if you have an inflation-led growth, I think that will be very, very good for the consumption space. And these have been, remember, stocks that were beaten down the most. So I think that this is something that could be very exciting for me. Or that's a trend that I'm seeing emerging in the markets the last few days.
Interesting. Consumption also reminds me, I have to ask you, Atul, what's the holiday list looking like? And now that, India has opened up to foreign travelers, you're going to get magazines and full catering services as well in flight. Where are you traveling next? And does that make you bullish in any of the hotel or aviation names?
So I think the thing is that, as I said, I spoke about revenge buying. I think that's going to be very visible in this holiday season, and this is going to affect your hotel stocks and stocks. I mean, you got to look at the airline price, like as good as going abroad. So the fact is that you are going to see a very, very big surge in the whole hospitality space. That is visible in the prices. You can go onto any booking site and find out it's happening in hotels. It's happening everywhere. And I think that is likely to really pan out. The fear is that obviously all these destinations are going to be really jam-packed and may not be as desirable. So probably you wait for the first level of froth to settle. Hopefully you will get a much saner places to go out to after that. But this is exactly the point I was making earlier about consumption, inflation-led consumption growth, that people are insensitive. They are just coming out. They just want to go on a holiday. They haven't been on a holiday for 1 to 2 years. They have saved up budgets. They didn't spend last year. So this time the ability to pay, and I think this will be a very, very big beneficiary for these consumption related stories. Apart from hotels, aviation, I think there are a lot of other sectors that are going to be beneficiaries.
Atul, good morning. First time I met Atul, he spoke to me so much about travel. Aisha too. I do think he should start a travel blog, and better late than never. He had some fantastic stories about how he was going to go see flamingos. But when you're talking about all of this consumption stuff, Atul, I want to just go back a little bit to the basics. And I think what a lot of our viewers might be thinking about too. On the one hand, they keep reading about how this earnings season, the cyclicals have outperformed. The earnings beat has come from cyclicals. But at the same time, they're also hearing about these big, big IPOs. They're trying to get allocations for it, whether it was a Zomato or a Nykaa. Paytm is coming up. The next wave is going to be Farmi, Z Delivery, Oyo. How are they supposed to actually balance their portfolio? Because you're the cyclicals which are outperforming in the earnings season, but you've got the new wave of technology here as well.
Yeah, so cyclicals as they stand out is nothing but a function of what you saw happening out in commodity prices. And that's where your metals and your energy related spaces panned out. So the $1 million question, not just for us, but for everybody in the world, is that this whole inflation that we are experiencing led by commodities, is it transitionary or is it structural? So obviously, this is something even the Fed at that level is, everyone has an opinion. I personally think that this is transitionary. I think that this is happening more because of the supply chain issues. Why I'm saying that is because I look at the way prices are correcting. One such commodity, if you go back, it's not so relevant in India, is lumber. You realize that how lumber prices went up 5x, 10x, and once you were able to get the supply chain, they kind of crashed. Baltic dry freight, which is again a very, very key element in this current crisis you see how that is correcting. So because of human dislocation or people are not being able to come back to work or not wanting to come back, you will have temporary bottlenecks. First time in the history of probably this world, the whole world economic machine shut down. So restarting it, even a car that's shut down and is not running for some time, when you crank it, it takes 2 cranks. And that is really what is happening. I think once people will get back to work, once we will have efficiencies in supply chain, which are man-made and they will even out, I feel that your whole commodity thing should cool off. And I think that is ultimately what will be the big calmer for inflation. And that I think will have a very good effect on, as I said, consumption or wherever today, which are experiencing pressures on margins because of higher input costs, actually realize that it can work the other way around. When raw material prices go down and you've taken price hikes, you realize that it works the other way around. So I really am in that camp, and that is how we are positioned, because we think this is transitionary. And the moment these things even out, it may take a month, a quarter, or whatever, but these very guys who've been able to pass on price hikes, these very guys who've been able to increase their market share, this kind of inflation also leads for marginal players to get wiped out. And the market share really goes up. We saw that in demonetization. In fact, the biggest beneficiary of demonetization have been organized play. And this has happened again in COVID, and this is again happening right now. The move to organize from small to large is happening globally and more so in India. So I continue to retain the faith in those plays which are structural demand stories and which we think are long-term trends, and we want to have them in our portfolio. One quarter margins may get compressed, but I don't think you can kill the basic theory, the basic trend or the mega trend. This is what we really think that it is.
Atul, it's always a pleasure talking to you. Thank you so much for joining us live today on The Market. Look forward to more.